All right, well, after getting pummeled yesterday, at least today we can make some quick and easy money. The market is up about 1.5%. This is a 5-minute chart. Here's the daily chart. So inside day there, volatility has dropped 21% on the VX futures, and the VIX is down 30% supposedly. In my cursory research the last couple days, seems like people value the VX futures as more accurate, but whatever, they're pretty similar overall. It kind of doesn't matter, I suppose. That being said, this big move up and then the crush in volatility, makes these quick and easy winners. These are 54% after one day. So I am taking these off. All right, got those both filled at 10 bucks each. I now have no positions on for the blue futures account or the pink contributions account. And here's the spreadsheet. Here's the short put 3,100 yesterday, which is crazy. It's like half, it's like 50% out of the money or something, 40%. Anyways, it's a 102-day expiration and I was only in it for one day. And I made 53.5% of the max profit, which was just short of 55 bucks. And the IV went from 100.7, IV rank, down to 60.7. That actually yesterday was up at like 200. I don't know how accurate these are in these crashy markets, but anyways, supposedly spiked about 200 and dropped to 60.7. And the price moved 82 bucks in my favor. And then this future one is the exact same trade, 3,100. One day got me literally the exact same thing. 53.5, just under 55, 100.7 down to 60.7. And I put that one on at a better price, but I think mostly it's well, I don't know. This one did move a lot, but $15 of price movement probably doesn't make that big of a difference when you have a 102-day expiration. So anyways, that one technically moved $98 in my favor as well. So with that winner, I'm going to take this opportunity to spend a little bit of money on a hedge. I'm going to go 24 days here, and I made 55 bucks. So approximately 20% of that is like 9 or 10 bucks here. So I'm going to buy 2 of these. They're way out of the money, but as we can see from what happened yesterday, it is all about the IV. So if we get another crazy spike in IV or the VIX, then these will actually make quite a bit of money, which is crazy to me because this is at the 3,000 strike. So anyways, I'm going to buy 2 of these for each of those accounts because they both made the same 55 bucks. And I'm taking about 20% of those proceeds, and I'm going to buy some protective puts. All right, got that filled at $1.10. I bought 2 of them, and times that by 5, that's $11 plus the commissions. So let me get the other account filled and I'll come back. All right, I got these 2 hedges on here. They're the exact same things. They're the MES U4, which is the closer expiration, and then they're at the 3,000 strike, long put, 24 DTE, which is August 30th, and then I got 2 of them. Cost $1.10 each, but then you times it by 5, and you get $11 plus the fees of $4.04. It's like half the price, or a third of the price. So grand total, they cost me $15.04. If I take that $15.04 that just cost me and divide that by the 54.96 that I just made, that means I used 27.4% of my profits to buy a hedge. That's technically a little bit higher than I wanted to spend, but this is such a small account and small dollar amounts that I would like to stay under 20% of the proceeds, but after the fees and everything, it goes to 27. And then, on 50 bucks, if you spend an extra dollar or two on fees, that's going to add up. So anyways, for now, that's fine. I'm just kind of getting into the swing of things here, trying to get some better hedging going to finish the spreadsheet. So grand total, it cost me $15.04. And then the delta was 0 with basically a 0% chance of pop. And then I added these two new columns just right now. The VX open, so VIX is 25. And then IV rank 60.7. I currently top ticked it right now at $5,300 is when I opened. And it is 43.4% out of the money. Since I opened those, the market has sold off about 18 to 20 points. So I'm looking pretty smart right about now, but we shall see. I'm not super confident these hedges are going to pay off. I mean, we're up 1.3% on the day. We were a little bit higher, obviously. And we're just having a little bit of a sell-off here. And it's still, still heading higher. And there's also a gap here at 53.57. So I would not be surprised if we came back and filled that gap. That also corresponds with this downward channel if you're into technical analysis, which there's like a 1% merit to it. I don't know what percentage I'd put on it. I basically only look at it because other people look at it. It's kind of a self-fulfilling prophecy, I feel like sometimes. But obviously not always, because if it actually worked, we'd all be millionaires. So clearly that's not the case. All right, I think that's it for now. The IV here has tapered off. It's now down to 25, and the price has rebounded. I definitely could see this coming up here and then selling off and making a new lower low. Certainly if we make a lower low, I will definitely sell some more puts. And yeah, other than that, it's just kind of a wait and see at this point. My accounts are real small, so I can't really do too much. I'm not in too big of a hurry to sell puts and stuff like that. I basically can only, after this whole shenanigans, I essentially can only have like one position on at a time. Oh yeah, I almost forgot to look at the profit curve here. So now, with these two 3,000 puts, that makes it look like this. So, if we all of a sudden tanked down to 4,600, I mean, the reality is we're up here. So if somehow we tanked, let's say to 5,000, give or take, I'd make 25 bucks, 30 bucks. That being said, I've noticed this little projection thing is not very accurate. So who knows how much I would make. And obviously it really depends on the VIX. If the VIX spikes like crazy, I'll make a lot of money. If it falls down here, I might not make anything. So we'll see. It's a shorter term hedge, which is in my favor if there's any sort of big downturn in the market. Historically speaking, looking back at the VIX when all these huge Volmageddon things happen, you typically see a lower low after this. So that'd be nice for me. That's how I'm sitting right now. Just for kicks, if I open a 45-day short put, collecting, just over 100 bucks, 110, this is what the profit curve would look like. So even with those two way out of the money protective puts, that's not enough if it crashed, right? So if I opened here and then it crashed down here to 5,000, give or take, that position would be down 90 bucks, 100 bucks, who knows? Again, depends on the VIX. So at this point, after a big bounce in the market, I'm not going to sell anything. I'm basically going to wait for a sell-off, or at least that's what I'm hoping for. And yeah, guess that's it. All right, thanks for tuning in. I'll see you in the next one.